All right, good evening, traders, depending on where you're watching me from. I want to welcome you to my market analysis tonight. It's nighttime, Nigeria, and broadcasting right from Nigeria tonight. So, I'm going to be sharing my view on some instruments tonight, especially the Canadian dollar pairs. Those are the pairs I'm going to be looking at tonight. All right, I have four people already live, in this section tonight. I'm going to be dropping the link to my Telegram channel. You can as well join me on Telegram for more. Join me on Telegram. Join me on Telegram. Okay, so that's the link to my Telegram channel that I just dropped right there. You can always join me on Telegram for more. Okay, so let's get started. So, like I said, I'm looking at the Canadian dollar pairs, and I'll start my analysis with the the CAD JPY. Now, there's something interesting about this instrument. There's the Canadian dollar pairs because across board there is a trade setup, for all these pairs. That tells you there is a strong sentiment around this instrument for some massive movement in the market, and that is exactly what we're going to explore in this analysis. So, starting from the USD card. Now, there's a USD card on the daily time frame. We can see that price has been in an overall bullish trend. Price has been trending up for quite some time from around March 2025, thereabout. That's in the last 1 year. This instrument has seen a massive uptrend, bullish movement. Now, in recent time, we can see that there is some measure of a retracement. Price trended up, then we can see some downward and some upward and some downward movement. And the next wave of movement looks to be like it's really trying to go upward again. So, with that being said, we'll look at the overall trend at the moment and the direction we're expecting price to go. And drawing my trend line, I can draw my trend line such that price touches a series of higher lows, and that's what we can see on the screen. Price is touching the trend line multiple times, and the next wave of movement now should be an upward movement. We can see price has touched the trend line multiple times, forming a series of we have a higher low here, we have another higher low here, another higher low right here, and previously we also had a higher low just right here. So we can see that the next wave of movement on this instrument should be an upward movement. So we can flip to a lower time frame like the 4 hour time frame, and this is the 4 hour time frame. So on the 4 hour time frame, I'm seeing a pattern that is looking currently like an inverse head and shoulder pattern. That's a shoulder, that's a head, still forming the head, the second shoulder, and the next wave of movement should be a breakout to the upside. So I maintain a bullish outlook on the card JPY. On the card JPY. Now, this is a swing setup. That means as we approach the new day, to which is going to be Wednesday, the 3rd of June 2026, you can look for an upward breakout, a bullish breakout on the card JPY on the 4 hour time frame. It's a bullish setup, and we anticipate price to break out and start trading in the upward direction. Now, if this setup works just like analyzed, what are the projected price levels, which you can use as profit taking levels? I'll use the recent high here, which can form a resistance as a profit taking level. I'll also take note of the next resistance level here. This is equally another area where price might hit. Then we have a next level here, which is a support, which could turn resistance, and finally we have the recent high itself, which can form a major resistance level. So, being a swing setup, these are all areas where I believe price could get to in the coming days. And to the recent high, that could fetch us just around some 20 pips on the average. The next level can fetch as much as 50 pips, the next one as much as 90, and the biggest one of it all as much as close to 190 pips thereabout. So I'm very bullish on the card JPY. So what do you need to do here? You need to keep watching this instrument, for the breakout. Don't forget, being an inverse head and shoulder pattern, there is equally a neckline region that price needs to break around there before we can see price triggered on the upside, to the upside rather. So overall, we are very, very bullish on the on the card JPY, pardon me, on the card JPY. We have a bullish setup. So just watch it closely, and if there's any breakout just in line with an analysis, feel free to take a bullish trade in that direction. All right, if you're watching this video, you're just joining, you can just go ahead and click the link to my Telegram channel and join me on Telegram for more analysis and more trading tips. All right, I'll move to the next instrument I'm analyzing, and that's the USD card. Now, the USD card, for the card JPY, the Canadian dollar is the base currency, while the JPY is the quote. So the essence, the main instruments we're looking at is actually the Canadian dollar. So in the USD card, the card is the quote currency. So if an instrument like card JPY is going bullish, then we expect all other pairs where the Canadian dollar is a quote currency to go bearish. And I have 5 of those kind of setup, across other Canadian dollar instruments where I'm expecting them to go bearish in the coming days. So the next instrument I'm going to be looking at is the USD card. That's the US dollar against the Canadian dollar. So let's look at it. Now, there's the USD card on the daily time frame, and we can sense one thing here, an overall downtrend. Like I said, if the card JPY is going bullish, then we expect an instrument like the USD card to go bearish. So we can see a sustained bearish trend, using the trend line on the USD card. The overall trend has been bearish, and price has been making a series of, lower high and lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So the next wave of movement technically should be a lower low. All right. So we can see clearly here that we have a downtrend to look out for on this instrument. Okay, I'll draw the trend line again. We have an overall bearish trend on the USD card. Here you can actually see price touching a series of lower high, lower high, lower high, lower high, and in recent time also price touch lower high. Now, from the third time price touches this trend line, we can see there strong bearish movement. So that means that now that price is back to that level, we are expecting a bearish movement on the USD card. So our overall outlook on the USD card is actually bearish. But let's still get further confirmation. You see, the more confirmation you have, the clearer the old trade setup is, and the more confidence will have in picking trades in this direction. All right. So we have an overall bearish sentiment. At a closer look on the USD card, I can see here also a pattern trying to form, which looks a lot like a double top pattern. Okay, I think I should change this line to blue. I think the blue line will be more visible. Okay, not, or maybe I should make it more bold. Let me see how that will work. All right, I think this is better. All right. So we're seeing a pattern forming, which is called a double top pattern. And usually double top will lead to a bearish breakout. So if all things work out, all things being equal, if this works as planned, either as a double top or the overall trend, we're expecting a bearish breakout on the USD card. But then all this is still on the daily time frame, lower time frame, which we may want to use potentially as the entry. So I'm switching down to the 4 hour time frame. So this is the 4 hour time frame you're seeing on the screen. Don't forget, on the daily time frame, we saw an overall bearish trend, downward trend line, uh, price touching the trend line multiple times, everything giving us a bearish outlook. And I said that I'm seeing the possible formation of a double top pattern. This is still the double top, even on the 4 hour, all things being equal. Okay, so we have valid reasons to look for a bearish trade on this one also. On this one, just as I'm analyzing it at the moment. So we can draw a trend line again, and a second trend line to give us a rising wedge, or better still, a channel, in this case. Also, still looking for a breakout to the downside. So, if all this setup works just like analyzed, I'll be looking at a breakout on the USD card, and that will give me a very massive sell trade on this instrument. Now, if it works just like this, we'll be looking also at our RSI to go clearly below 50 at the point of entry. That's very important, and possibly our MACD crossing below zero. But then let's look at the potential profit taking levels if everything works out as planned. Now, during my Fibonacci tool, uh, price could break out anywhere from around this region. So let's look at the Fibonacci 50. Fibonacci 50 could give us as much as about, let's say, roughly 60 pips. Oh, that's Fibonacci 38.2, pardon me, can give as much as 50p. That's if you want to make an early entry. But if you want to use the neckline of the double top, which actually is recommended, let's follow the rules. That means we're looking at entry below the neckline region. So Fibonacci 38.2 actually can give as much as around, let's just say, roughly 20 pips. Fibonacci 50 can give as much as 60 pips. Fibonacci 61.8 can give as much as 99. That's approximately 100 pips. And if the volatility is really strong, Fibonacci 78.6 can give as much as 153 pips. So we are very, very bearish on the USD card. Now, what if price don't go our way? Well, that could only happen under one condition: if price reverses and breaks out above this current box. That's the only condition. If price breaks out above that region, then that is the only thing that can invalidate this setup. Otherwise, I want to maintain a strong bearish outlook on the USD card. So we're very, very bearish on the USD card. All right, I'll switch to the next instrument. Like I said, I'm just looking at the Canadian dollar pairs because there's a strong setup on all of them across board. So I'm looking at the GBP card next, and I can tell you it's just as bearish as the USD card. But then let's just go ahead and analyze it also. So for the GBP card, this is the daily time frame again. Now you may wonder, why am I looking at daily time frame? Because the daily time frame, the higher time frames gives clarity as to the direction of the market. Lower time frames, 1 hour, 4 hour, they are better for entry. So look at the trend in the big picture, because the market often goes in the direction of the higher time frame. All right. With that being said, let's look at the GBP card. Now, there is a GBP card on the daily time frame, and we can also see there is an overall bearish trend on this instrument on the daily time frame. Price is trending downwards. It's trending downwards. And we can see also, next thing here is there is now this downward trend is indicative of a bearish pressure, and there is a resistance here. Now we have a powerful confluence here: trend line and resistance. Both of them indicate just one thing: a potential bearish breakout. Now the current daily candle for today, we can see there is forming a rejection candle. Now time as we speak is 9:27 p.m. By 10 p.m. we'll cross over to a new day. If this current rejection candle closes by 10, just as a rejection candle, that is another confirmation of a possible bearish movement on the GBP card, especially tomorrow. But then, with the analysis for now, we see downtrend, resistance, rejection candle. Everything is pointing towards a bearish breakout on the GBP card. Now, I'll switch over to the 4 hour time frame, and this is the 4 hour time frame. Now, two things come to mind right here. One, I'm seeing the possible formation of a double top pattern. Now, a double top pattern is a chart pattern that drives price to the bearish direction. So anytime you see double top, it means we could end up having a reversal in the bearish direction, and that still falls in line with what we have seen on the daily time frame, for this particular instrument. All right, so that's on one side. We can see a possible double top pattern, and the next one is if you want to make entry. Okay, let's take it this way. If you want to make entry as a swing trader, then you may want to look at that double top forming completely and price breaking out below the neckline region. So that means you'll be looking at entry below the neckline, maybe somewhere around here, and you want to ride the trend downwards. So let's first of all address the day trader. Don't forget we have the confluence zone right there where the trend line, the resistance, and the candlestick all met together. I'm going to use the ellipse to mark that region. This is our confluence point from where we are expecting the reversal to happen. So, but then as a day swing trader, we're looking at the lower neckline region to trigger a sell, and we may look at profit taking. Now, let's look at the big picture here from the entry point, which is around 850 to 8. Anywhere below that should be your entry. You may look at price targeting Fibonacci 61.8, and that can generate as much as 66 pips, roughly let's say 60 pips. And Fibonacci 78.6 can generate as much as 100 and let's say roughly 125, 26 pips. And Fibonacci 100 could give as much as 200 pips on a swing trade. All right, so that's that on the swing side. But then let's look at the intraday for those who are intraday traders. So if you're there, you're an intraday trader, don't worry, you're not left out. There's something for you. All right, so for the intraday traders, we'll be looking at price we'll be looking at making entry on a 1 hour time frame. 1 hour is our short bet for day traders. So for day trader, I'll draw my trend line right here, a second trend line to form a channel. And now we can see that price, we're looking for purely a bearish breakout. Now we can clearly see that price is testing the lower trend line, really testing it strongly. That means price touched it and is bouncing. But then what we're looking out for is a breakout below this lower trend line of the channel. So let me draw the arrow to indicate we're looking for a breakout to the downside. Now, if that breakout happens, we're also to look for a confirmation with our RSI. Our RSI should cross below 50. That is a further bearish confirmation. RSI crossing below 50, and MACD also possibly crossing below 0. It's not compulsory for the MACD. The most important is the RSI. But the MACD crosses also, that is an additional confirmation. So we're very, very bearish on the GBP card. So let's look at the possible profit taking levels, all things being equal. Now we're going to be looking for entry once price makes a clean break below Fibonacci 23.6, and there is a minor rectangle around that region. At a closer look here, I'm also seeing something that looks like a head and shoulder pattern, forming right here within the 1 hour time frame. That's a shoulder, a head, a possible second shoulder, and a breakout. It's still information, but if it forms like this, it's an additional confirmation to a bearish breakout. So we're looking at entry below this box. That's around 1.86155. That could be our projected entry. So profit level should be the first Fibonacci level, Fibonacci 38.2. That can be around 12 pips, or roughly let's just say 10 pips. Next Fibonacci level where price could get to is Fibonacci 50, and that will be 30 pips. Then we have Fibonacci 61.8 at about 47, 48 pips. And if the volatility is really strong, price could go to Fibonacci 78.6, and that would be roughly about 70 pips. So either as a day trader on 1 hour or as a swing trader on 4 hour, we have a bearish outlook on the GBP card. We are very, very bearish on the GBP card. All right, if you enjoyed this video, go ahead and click the like button. Drop a comment in the comment section. If you have any instruments you want me to analyze, just drop it, and I will definitely get back to you analyzing that instrument. So You can also come to the comment section. You can see the link to my Telegram channel. Just click it and join me right on Telegram, and you get a lot of other tips on how to trade. Also, let me know where you're watching from. Just drop your comment in the comment section. Where are you watching from? I want to know where you are watching from, which country. I'm from Nigeria. So where are you watching from? Are you watching from Ghana? Are you watching from South Africa? Are you watching from United States, United Kingdom, Canada? Let me know. Just drop it in the comment section. All right, let's make progress. Let's go to the next instrument, and that will be the AUD card. AUD card. You can see that all these instruments, they generally have a bearish sentiment. That means that the sentiment for bearish movement is very strong across these Canadian dollar pairs. Now for the AUD card on the daily time frame, price currently is trading around a resistance level. Today's daily candle, which will close any moment from now in the next 26 minutes, is going to close at this resistance level on the daily time frame. Now let's go over to the weekly time frame, or even possibly the monthly time frame, to get a clearer perspective to this instrument. Now on the monthly time frame, we can clearly see that price is trading around a previous resistance zone. Pardon me for that. All right, so we can clearly see that price is trading around a previous resistance zone right on the monthly time frame. So it's still covered in the weekly. Now we take it straight to the daily time frame. We're still within that monthly resistance zone. Now on that daily time frame, I'm seeing, don't forget that we're bearish on most of these instruments. Most of them are being bearish. I'm seeing the formation of a head and shoulder pattern, second shoulder, and that can lead to a massive bearish breakout on the AUD card in the coming days, all things being equal. So we need to put that word all things being equal, because this market works based on depends heavily on the forces of demand and supply. If all the parameters align with these technicals, that's what is that bearish direction we're expected to see. But then sometimes things could change. So but then generally, with price hitting the resistance, and at least for now on that, we can look for a potential reversal. Now on the 4-hour time frame, I can see clearly here the formation of a rising wedge pattern on the 4-hour. So that is giving us confirming a bearish sentiment from what we can see clearly on the monthly and the daily time frame. I think I will look at this more from that angle of the now. If you can trade it either as a day trader or swing trader. So okay, let's look at it first on the day trader perspective. So if you're trading as a day trader on 1 hour, you will be looking at a clear breakout, below the lower trend line, RSI again below 50, MACD below zero. Now that will give you a faster entry compared to someone trading as a swing trader on 4-hour. Because as a swing trader on 4-hour, you need to also look at your RSI below 50. It will take you longer time. MACD below zero will equally take you longer time. But then if you are patient enough as a swing trader, yes, we're going to experience that breakout, that massive breakout. And if that breakout happens, price may be going eventually to target the recent low. That may be the biggest point that price may drop to. But then on a clearer big picture, like what I said earlier, that may also help in completing the second shoulder of this head and shoulder pattern, because this region now becomes the neckline region. Don't forget, this is still information. It's not completed yet. We're just analyzing, giving a forecast, a futuristic forecast. So if that area gets completed, price drops to touch this neckline region, and a new candle opens below, then that will lead to further massive bearish breakout on the AUD card. Okay, so but for now, we just want to maintain that recent area, that neckline region as our level, as our projected profit level, until there's confirmation of further bearish breakout. So I'm bearish on the AUD card on both 1 hour and the 4 hour time frame. All right, next I'll be looking at is the NZD card. The NZD card. Now this is on the weekly time frame, and on the weekly time frame on the NZD card, again I can see the overall trend right here is bearish. Price is trending massively downward, making a series of lower highs and lower lows. You can see here we have lower high to lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Then the next wave of movement will be a lower low. All right. So we have a bearish outlook on this instrument, but then there are still a couple of other confluences here and there to confirm this bearish trend. Now we've seen the setup just now. Next, secondly, there's equally a big resistance here giving us a confluence where the trend line and the resistance meets. All right, so we can see with the ellipse, we have that point where the trend line and the resistance meets. This technically tells us to look out for a bearish movement on this instrument. So that's all on the weekly. You can take it down to the daily time frame and even lower. So let's go up to check the daily. Let me remove the ellipse there. So let's go to the daily time frame. Nothing much on the daily, so let's go to the 4 hour. Okay, I think I'll get a clearer view on the 1 hour time frame. All right, so this is a 1 hour time frame. What I'm seeing here is a shoulder, a head. This is a shoulder, a head, a second shoulder. Then the next wave should be a bearish breakout. This region being the neckline. All right. So you can see that price has already broken out below the neckline and we're anticipating a massive move downwards. So we're very, very bearish on the NZD card. Now, price using Fibonacci levels, price is expected to target the following Fibonacci levels. Price, okay, we need a clear breakout. Fibonacci 50 is aligning with the lower part there. So we'll need to use that as a support. We'll need price to break out by at least 5 pips below Fibonacci 50 so that that can be a safe trade. All right. So we can look at the first profit taking level at Fibonacci 50 at around 20 pips, Fibonacci 61.8 at around 45 pips, and Fibonacci 17.6 at around 80 to 83 pips thereabout. So that's a bearish one on the NZD card, and this is purely a day trade. It's purely a 1 hour trade, and I want you to take note of that. Purely 1 hour trade call on that, bearish on the NZD card. And finally, I'll be looking at the Euro card. The Euro card is the next one I'm looking at, and this is the Euro card on the daily time frame. Euro card on the daily time frame. On one angle, just like the others, we have a descending trend line, and the current daily candle is, you can see over there, is forming a rejection candle, a doji. And you can see in the last couple of days, price has been ranging, closing as rejection candles. All this at the lower, descending trend line is an indication of a potential bearish movement. But let's look at this further. You can extend this to actually also form a resistance on the daily time frame. So we have a confluence zone where the trend line and the resistance, meet. And we also have a rejection candle at that point that indicates a potential bearish movement on the Euro card. All right, so let's go to a lower time frame. Like, let's start with the 4 hour time frame. On the 4 hour, I can see the clear formation of a rising wedge pattern. Currently, price is testing that trend line, and you can see it bounce to the upside. But then, if price breaks out below the lower trend line, we're going to see a massive movement downwards. RSI below 50, MACD below zero, and that will lead us to a bearish trade, a sell trade on the Euro card. And if we flip down to 1 hour, it's still going to be the same thing. Only this can trigger us into an entry faster because RSI is already clearly below 50 and MACD is already clearly below zero. So we may have a faster entry, on the 1 hour time frame. So by and large, we are very bearish on the Euro card on both 1 hour and 4 hour. All right, that's going to be the end of my analysis tonight. If you enjoyed this analysis session, you've picked direction for all these instruments I've mentioned, from the CAD JPY to the USD CAD. We're bullish on the CAD JPY, we're bearish on the USD CAD, we're bearish on the GBP CAD, NZD CAD, AUD CAD, and Euro CAD. So in the coming days, you can watch out as price begins to make its move on these instruments, and that can help you to catch some very good profit in the market. Now, if you want to join me on how to trade this setup as they eventually evolve into a signal, just click the link on my screen right now, which leads you straight to my Telegram channel. T https colon // t.me/avila fx academy. I'm going to drop it again. Join me on Telegram. Join me on Telegram at that link, and you can get access, to more trading insights on how to trade the market. All right, so I just dropped the link again. And there are other resources that can help you become a profitable trader. I have here 2 books written by me. I have over a decade experience in the trading space. So I just wrote 2 books that can help you. The first one is the Forex 6-figure blueprint. All right, I'm dropping the link right here also. The Forex 6-figure blueprint. This book will show you multiple income stream opportunity in the forex market. You need to have this. It's going to really help you, to make more money in the market by you being able to activate multiple streams of income from this forex market. And the next book I'm going to share with you, okay, I think I need to share the flyer to that book so that that can give you a clarity of what I'm talking about. Okay, just in a second, I will be sharing the I'll be sharing the flyer, the e-cover, pardon me, the e-cover. Okay, I'm not really seeing an option to share flyer right here. All right, I'll drop the link somewhere for you to see. Let me just share the link to the second ebook. Now you're a beginner trader. Beginner trader are making mistakes. They are making mistakes by the day. So this second ebook is going to help you know the areas you're making mistakes and how to correct it so that it can become more profitable. The title of this second ebook talks about stop losing money in forex. Here we're talking about 25 mistakes made by beginner, intermediate, and advanced trader. I believe you belong to one of those categories. Just get these ebooks and learn how to minimize your mistakes and improve your profitability as a trader. All right, so I'll come your way again very, very soon with another live analysis session. Take care, and it's bye for now. Bye.